Hello, everyone, and welcome. My name is Zenon Kapran, and welcome to I think, what is our 14th edition of our top 10 Asia Pacific Fintech Trends for 2024. This is one of our most popular webinars of the year where we look at where things are going over the course of next year. As I mentioned, we've done this every year, and this is accompanied by a report that we publish looking at these trends across the year. Really excited today to have a diverse panel with us. This is kind of similar to a format that we did in the past. My name, of course, is Zenon Kapran, and I'll be moderating for this session. We're also excited to have with us Atlas Technologies. As you would have known, Kapronasia was acquired by Atlas Technologies later last year, and we're excited to be part of the group. Joining us today is Yashihiro Maeda-san, who is the executive officer and partner at Atlas Technologies in Japan. Also from our team from Kapronasia here in Singapore, we have Kiran Zaveri, who's the head of product for Kapronasia, and Joe Jelinek, who's the research director here at Kapronasia. Now, as you know, over the course of every year, we look at what the trends are across the space, and to share those with you right now, these are the top 10, or is actually 11 fintech trends in APAC in 2024 that we're seeing. So first of all, open banking. I think this has been on a topic for many people, but we see this as being a key year for open banking in the region. We also look at things like cybersecurity, of course, generative AI, which took the world by storm with OpenAI and ChatGPT last year. The biometric boom, how people are starting to use their faces and fingers to click to make payments, investments, and everything else in the financial industry. Cash in many parts of Asia is still king. We'll also look at financial literacy, so the education of people both in developed and developing markets and how that's impacting the financial industry. Take a look at China and where China stands going forward in the future, and then Japan's fintech awakening, in particular, looking at the impacts with the demographic shifts that Japan is going through. Finally, to round it out, the last three, Southeast Asia's fintech bubble bursts. So we'll look at funding in the region, finance moving upstream in the gig economy, and fintech's pivot to transitional finance. So these are the trends that we've identified for 2024. Of course, there are many more that we could have looked at for this, but when we looked through everything that was happening within the financial industry in Asia, this was really the ones that stood out to us that we think are really going to have an impact on what's happening in financial services in 2024. So over the course of this webinar, we'll go into detail on some of these a little bit more in a little bit more depth to discuss kind of why we picked these trends and where we think they're going in the future. And I'll rely on the expert knowledge of our panelists to help guide the conversation as we go through this. As always, if you have any questions, please do drop them into Zoom, and we'll get to as many of those as we can. If we don't get to your question, we'll, of course, reply to you after the webinar and with our answers and thoughts on whatever your pressing issues or burning questions are. In addition, as I mentioned before, this will be part of or accompanied by a report, which is typical for us, our top 10 trends report, which will be launched within about a week and a half from the time of this recording. So if you've registered or attended this session today, we'll reach out with an email telling you how to obtain the report. So without further ado, and with that housekeeping out of the way, let's go into the first trend, which is around open banking. So for this, we said the open banking will be a catalyst to unlocking real-time regional payments in Southeast Asia. I think one of the challenges that we're all aware of in Southeast Asia is the lack of a comprehensive multilateral payment platform, a la the SEPA, Single European Payment Area in Europe, or what we've seen in other regions as well. The challenges around this are manyfold, but fundamentally come down to political issues, questions about ownership, currency issues. As far back as 2007, there was a website, Asia Payments Network, I believe, that was registered in 2007. And it was put forward by the ASEAN organization with the idea that eventually the region would come up with a regional payment platform. But we haven't seen that. And that's despite there being a tremendous amount of innovation around real-time payments in every individual country. And indeed, when you look across the region, nearly every country in Southeast Asia, anyways, and APAC has real-time payments, but have struggled to bring that into any kind of cohesive network. So what we're seeing is more bilateral. So we see Pay Now here in Singapore connecting into UPI in India, Pay Now connecting into Prompt Pay in Thailand, and these kind of bilateral relationships. Now, the thesis that we have here is that open banking could be effectively the Trojan horse that gets real-time regional payments going. A lot of the concepts around open banking have been implemented on a domestic level in many countries. We did some work later last year in the Philippines looking at the BSB's approach to open banking in that country, and many other countries are looking at open banking and regulations around that. As part of those regulations, there's obviously requirements around data sharing, privacy, and a lot of the challenges that would also be faced by any kind of regional payment network. So this is really what we feel will be a shift in the direction of the regional payment network insofar that open banking will be the Trojan horse to get this through the door. So to join me in this conversation, probably our resident expert in open banking, Joe, I want to come over to you. I mean, what are your thoughts on this trend? Do you think this is realistic that
Yeah.
open banking really will be the Trojan horse to get us in the door, or is this just wishing?
Thanks very much, Tony. Look, it's a great question, and this has been a fundamental issue for the region, as you were saying, that because it's so disparate, it really does hinder the development of cross-border real-time payments, and that's despite nearly every country in ASEAN having its own domestic real-time payment infrastructure. And so, what we're hoping is that with open banking, we're going to start to see, as it develops across the region, more regional collaboration and coordination that will enable regional interoperability through common data standards and APIs for cross-border transactions. So really, it just comes down to the importance of having those standards and having those API frameworks. But if we want to see this happen, it's going to require extensive coordination throughout the ecosystem and collaboration between governments, regulators, and financial institutions. So I think it's a little bit of a stretch, but I think open banking is very much on the cards. Every country here has its agenda, so I think it's a possibility that we will certainly start to move in that direction. Whether or not it will happen in the immediate future, can't say, but I think we are moving in the right direction.
Yeah, and Joe, you and I have attended many sessions where I remember distinctly at the FinTech Festival a couple of years ago. You know, you had a bunch of regulators around the table, and when it came to commenting on the future of the ASEAN payment network, many of them pulled out their cue cards and read prepared statements about how they're committed to change, but nothing was really in place. So I think this is I'm hopeful that this is the thing that drives it forward, but I'm not. I have my reticence and disbelief as well on this. Maeda-san, maybe let me come to you on this. I mean, when we look at things from the Japanese perspective, and both domestically in Japan, and then when you look at the integration of Japan into the rest of Asia and what's happening here in Southeast Asia, what's your feeling and the ability of something like open banking to drive this regional integration?
Thank you very much, Zenon, for asking me about the questions. Regarding open banking, the Japan government actually has changed its banking law in 2018 to motivate banks to develop and publish API for the third parties, which has changed the landscape, although majority of those APIs are still read API, just for the looking inside of it, and still feel right APIs that even at this moment, unfortunately. And so the third parties now they have formed the associations and they conducting lobbying activity to increase right APIs by banks. And while at it, and then in the meantime, although there is not much of the activities movement in the RTP type of thing, or even the cross-border the settlements or the money send, those banks that are quite reluctant to the open macro functionality of their banking functionality to by enhancing the API, but they are quite aggressive pursuing opportunity to provide their banking function to major retailers, which want to provide financial service to their customers. In a way, this is also can be considered as open banking, but it's a little bit different, taking different route. So MNO, mobile network operator like NTT Docomo, the biggest MNO in Japan, or the JR is the biggest railway company in Japan, type of the merchants, all sign up the contract with the digital banks to open up their own bank branches. So this is not a new concept, as I said it, but the one uniqueness that majority of those neobanks platform is provided by the bank as a white label. And, there is a regulatory license only allowing them to conduct the banking services, such as taking the money for deposit, also on their partner bank's behalf. It's not as if that they have become the bank. They are not the bank. They are, on behalf of those partner bank. So I will stop here because this could easily goes into more deep conversation. Why so? And but I believe every country has many unique points, and this is definitely the one of Japan's unique development on that regard.
That's really interesting. I mean, that concept of embedded finance is really gathering hold, not just in Japan, but across the region as well. I think in terms of what organizations are doing, we have a paper coming out or has just been published around embedded finance for corporates in Singapore, because increasingly a lot of these companies that are very non-traditional finance companies and aren't even involved in the financial value chain are looking at embedded finance as a way of kind of driving additional revenue streams. You kind of expect it from maybe an airline or another place that you would have a um, traditional kind of financial interaction, but increasingly you see it with washing machine manufacturers and everything in between. So it's really amazing how that trend is across the region as well. Thanks for that, Maeda-san. So going back to our trends, number two is looking at cybersecurity. Cybersecurity's escalating importance, and we feel that in 2024, cybersecurity will be a crucial focus for Asia's financial sector. Now, that's not to say that it hasn't been in the past, but I think the dynamics that we're seeing now, particularly in Asia, is here in Singapore, we'll get texts, WhatsApp messages, and everything in between asking us to rate various things, or, our bank account is locked. A couple times a day, you get calls asking you portraying to be the immigration authority and asking you to answer questions and all of these fraudulent scams. And then cybersecurity itself is becoming more challenging. I think on one hand we have generative AI that's creating a lot of positives, but then it also makes it much easier to program, to find loopholes in code and holes in code. So really for us, I think in 2024, we haven't seen really across the region, or at least it hasn't been reported, any major cybersecurity incidents within the financial industry. We kind of feel that that might change in 2024. Kieran, let me come over to you. I mean, you've obviously a background in cybersecurity and understand the space well. What what do you feel is going to be the key focuses for banks as we go forward in 2024?
Thanks, Anand, and good afternoon, everybody. You're absolutely right. Cybersecurity has been, a core part of banking operations, client value, and importance for banking customers, and also for the technology ecosystem that supports banks. It's been around for a long time, and there's always been this cat and mouse game between banks innovating and trying to build the best customer experiences and the cyber criminals trying to manipulate those experiences and defraud banks and their customers. Um, as you mentioned, though, 2024 and the late part of 2023, we've seen exponential change in the industry and the space, driven by the adoption of generative content, the increase in computational power, which has enabled cyber criminals to utilize these tools for bad, as it were, right? So, despite us seeing fantastic experiences created by banks, such as wealth management, advisory products, on the other side of the equation, cyber criminals have equally used these tools to invest in things like synthetic fraud, which has had an exponential increase in fraud for banks themselves. So over $8 billion worth of fraud from the last year was contributed from synthetic fraud, where cyber criminals are generating content and mixing that with legitimate ID information of a user, tricking the banking systems, so getting past lending, KYC and KYB controls, and so forth. So we are at that precipice of exponential change, and it is down to the industry, the regulators, the banks, the technology providers to work together to put together the solutions to combat the changes that we're seeing across the space. This will take time. And as you mentioned, in specific markets, we're seeing an exponential uptick of SMSs, of automated calls, all soliciting information from users. Part of this is the social engineering aspect of cyber criminals, which has always been there. But the more scary part is the ability to do this at scale with the available tools that are out there in the market now.
Thanks for that, Kieran. As you were talking, we got a question in from the audience. It just the question comes and says, "Is this a never-ending struggle? Is there any way that banks can ever get on top of this and actually be ahead of the cyber criminals?"
Yeah, it does feel like the plot of Catch Me If You Can a little bit, right? But I do feel that there will always be an element of fraud, right? Wherever there have been banks, there have been bank robbers, and I don't think that that's going to change. What will change, though, is authentication, the ability for consumer experiences to get better and consumers to get more wise to cyber criminals' behavior will improve over time. A more recent rollout and innovation is the rollout of passkeys to help with authentication in a more seamless way. So leveraging, a biometric capability of your device to authenticate to your bank account versus having just a password is a huge step forward in reducing the ability for cyber criminals to, clear out a bank account. And so this is like one of the innovations out of many that have happened over the last couple of years, and it will continue to evolve. But I wouldn't say that we're going to be in a world where cyber criminals won't exist. Unfortunately, that's always going to be the case.
Yeah. I was thinking with Catch Me If You Can, at least the movie ended at one point, and I think he was actually caught in the end, but may not always be the case, I guess.
Yeah.
Maeda-san, let me come over to you. I mean, talking about this from the Japanese context, where does cybersecurity rate for Japanese banks on their priorities for 2024?
Yes, thank you. Similar to other countries in Asia, Japan is also experiencing significant amount and growth of fraud in both card transactions as well as the banking transactions. For card, industry has suffered approximately US $300 million equivalent in 2022, and they are expecting more to come in, unfortunately, 2023. More than 93% of the fraud is happening at the online transaction, which is no-brainer, and that trend is continuing. Now, to stop this trend, the government has mandated compliance with PCI DSS, 3DS, and a system modification completion to not to hold any credit card number in their merchant system by the end of the March 2025. And for banking transactions, similar to what's happening in the other Asia country, as more consumer uses online banking apps, the number of the cases in unauthorized remittance via unauthorized access has jumped significantly and by 5 times compared to last year. And the fraud amount is still smaller than the card fraud, but which is around US $55 million worth equivalent. But that amount is increasing quite rapidly as well. So banks are start implementing more security, as mentioned by the Xenon, and the measurement on their banking apps. But it often spoils the usability and the convenience, which was supposed to provide. So it's not ideal situation for the customer satisfaction, but currently there's no ideal. There's no the one-stop solutions to kill both fraudulent and as well as they retain the convenience for the customers right now. So it's similar situation as catch me if you can type of thing. It's continuing and it never stops, unfortunately.
Yeah, those are good points, and you brought up a good point, Maeda-san, around the customer experience, because I think
Right.
that's in all of these things. You want to try and protect the customer, but you also want to keep the customer as a customer, and you only do that by having the correct customer experience in place, and finding that delicate balance can be really challenging. And I think the other point that you brought up that was quite interesting is, I guess in Japan, it's a fairly digital society, but I think when we look across the region, a lot of these, although in many places like China, we've hit peak smartphone penetration is still increasing in a lot of Southeast Asia as people move from either no phones to smartphones or feature phones to smartphones. And so as people get onto these platforms that they may not be 100% familiar with, there's the challenge, right, of being able to use the the tool effectively and safely as well, which is just means more attack vectors for these crafty cyber criminals
That's
as they
right.
come through.
Mhm.
Thanks for that, Minasan. The next trend that we have, trend number three, is of course generative AI, and our feeling on this is that this will be the normal going forward in the financial industry in 2024. I think 2023 was the year that many of us used Chat GPT for the first time, indeed the time that it was released to the general public. And after asking it lots of silly questions, we started asking it more serious questions around, financial product recommendations. And the challenge here has always been around the data. So ChatGPT, very rightly so, says I can't give you any financial advice because I don't know about who you are. I don't know if you have $100 or $1 million in the bank. But once you start inputting that data, then all of a sudden it can make better choices. And I think we've seen a couple of examples in the public space around platforms like Bank GPT. We can include a link of that in the notes, but if you haven't seen that, that's a plugin for ChatGPT that pulls fictitious bank data. But it is a good example of how we could incorporate a consumer or business's bank information into a platform like ChatGPT or other generative AI platforms. So, Kieran, I want to bring you into the conversation on this, and let's talk a little bit about where do you see the low hanging fruit for generative AI in 2024 for banks, and what is the one application do you think that we wouldn't think that a bank would use generative AI for, but they likely will in the future?
Yeah, thanks, Sanon. Where to begin? Quite a lot to cover on the space of generative AI, and you're absolutely right. Now that we've moved past the phase of asking generative AI to generate funny images of our boss, we are now in the stage of figuring out where can we actually apply this in a intuitive and valuable way for our customers. Um, I think for a long time, banks have had robo advisors and advisory services as an example. But what we're seeing now is a behavior where banks are really looking through your data on a month to month basis and providing context and advice back off of that data. And some early examples with the digital banks of that have been really fascinating to see. So for example, if you've had a abnormally large purchase or a series of purchases in a trend, a bank may now be able to offer you a short-term buy now pay later loan to spread out those costs. They may be able to offer you a link to some vouchers for similar products if they have partnerships with a commerce provider, and all of that is being built on the foundations of AI and building out large language models and looking at the data and then providing that back in an intuitive interface to users. But generative AI is still at its embryonic stage. AI has been around for the last like 20, 30 years, but this notion that content can be created and what content should be created for banking services is still very, very new. It's fascinating to see the experiments that are out there in the market. I think in terms of predicting what might come next, I think we're going to see a lot more interactions with our traditional bank accounts through new interfaces. So rather than scrolling through screens of transactions, you may be able to just chat with your banking app and ask it questions about what were my last 15 grocery spends. We may be able to get richer content, receipt level information into our banking apps as they combine data. There's so many different new innovations and directions generative AI can bring to the user experience. But it also has massive implications for banks themselves and the ability to harness that data and potentially work with partnerships and leverage that as potential revenue streams in the future. I think the last point I would make is privacy is still paramount, and there's a lot of work to be done between the banks, the regulators, to continue to retain consumer trust as they roll out new innovative experiences.
Those are really good points. Thanks, Kieran. I think and you kind of hinted at this as well. There's the entire ethical question around this. One of the things that somebody brought up was kind of interesting is that AI right now is in a bit of an arms race. So, it's nice that the EU and the US is talking about limiting AI research and putting some guardrails in place. There are a lot of countries around the world that won't have those guardrails in place. And so, how do you continue to innovate around AI in a responsible manner? And then how do you address the ethical questions around transparency, explainability, fairness of all of these questions around artificial intelligence too? So it's a very interesting space, and of course, we'll develop a lot over the course of this year. We, as part of our training that Kieran and I are working on for Kapronasia as well, incorporate AI into a number of the training programs that we do with SMU, and that's always one of the more popular courses as people are really looking to understand the impact of this. Great, thanks, Kieran. The next trend that we had for 2024 was the biometric boom. And this is really around facial recognition and biometrics in general going mainstream. So I think we're all used to this on our iPhones or Android phones, using our thumbs or using our faces to unlock and validate transactions. And whilst this may have seemed a little bit foreign to us a number of years ago, it's very clear that this has become acceptable for many people. I count on one hand the number of friends that don't trust biometrics in their phone or just even haven't even asked the questions around it. So it's clear that in our own personal devices, we're starting to see more use of biometrics. But I think what's interesting and kind of what we're flagging in our discussion on this in the report is that over the course of 2024, a lot of this will be integrated into financial products and services that are offered by banks. And so when you go to the ATM or when you go to another point of interaction with a bank, increasingly biometrics will be a big part of that. And India is a good example around that with the Aadhaar, the biometric database, using just a fingerprint or other biometric marker, able to validate transactions and make transactions in that context. So I think we'll definitely see some change around this and more adoption of biometrics as we go forward in 2024. Kieran, back to you on this one. And you're quite familiar with biometrics in the past. Where do you see this going briefly?
Yeah, again, a very fascinating space that has major implications for our user experience and the interactions that we have with financial services in the future. It does feel, again, a little bit like a movie living in a dystopian future of Minority Report, but it's here and now in many, many cases. Biometrics from a banking and financial services standpoint have been actually around for a long time. Like my first interaction with a retina scanning ATM was like 5 or 6 years ago. But the challenge has been exactly what you highlighted. There has been concerns around privacy, and there have been concerns around adoption and how do we keep people's data safe, and how do we make this adoption happen in a staged and safe way. When we start thinking about people's retinas, their fingerprints, the implications of that data being lost to cyber criminals and then being repurposed as a form of identity has major implications, especially when it comes to people's money. So I feel the industry has been quite thoughtful about progressively rolling this out. But we are now at that point where the actual sensors, the ability, the hardware for enabling biometrics has really reached a tipping point where it can be mass produced and rolled out at very low cost. So biometrics has huge potential in terms of improving experience, as you mentioned earlier. So walking into a branch or to an ATM, seamlessly authenticating and being able to interact with your financial services, your account, withdrawing money, and so forth. All the way through to acting as a form of identity where it doesn't require you to say or do anything, but by merely walking into the branch, you're all pre-authenticated. So it'll be really interesting to see how innovative the financial services sector will be, and how they find that balance between consumer privacy and user experience, and finding a balance between not being too creepy with how much they automate, with how much convenience and security that they provide. fascinating space, and I'm very excited and looking forward to some of the innovations. I've seen in the last couple of weeks, we've seen Palm Pay roll out in China, and as you mentioned, in India with the thumbprints, leveraging UPI to authenticate. So much more to come in this space.
Those are really good points. I think, Maeda-san, I want to come to you on this. I mean, a lot of what Kieran was saying in terms of the adoption of biometrics is down to the comfort level around that. What do you see as differences maybe between a typical Japanese consumer and somebody from outside of Japan in their acceptance of biometrics? Is it something that's quite common in Japan? Are there any questions around it?
Biometrics is acceptance in Japan is becoming quite common, I would assume, I would say. Mainly thanks to the smartphone, like Android, iPhone. We kind of get used to using our thumbnail or face recognitions to get authentications as well. And then on the banking financial sector, it is kind of there was like 20 years ago there was a first application deployed by the bank back then that was called Tokyo Mitsubishi Bank that had deployed ATM that enables that the thumbnail as authentication method to withdraw the money with utilizing the card. So they stored in an image of a thumbnail onto the card and then checks and they also installed the thumbnail reader on the ATM and then matches up, you can withdraw the money. But unfortunately, it was a little bit too advanced back then, and it didn't go. It didn't go as well. It didn't go as planned as they thought it's going to be. So they kind of stopped it. And but recently, at the end of last year, the Seven Bank, which is the subsidiary, the bank division of the 7-Eleven, which is convenience store. And by the way, they are the number two ATM the provider in Japan. So they are the ATM only type of bank. And then they have made announcement that they have developed a new ATM that enables face recognition to be able to withdraw the money from your bank account. So, they don't know how it's going to be accepted by the Japanese nationals. But they are also saying that you can also open the bank account through the ATM. It sounds very convenient, but I don't know how many people is going to use ATM to open the bank account with your facial recognitions installed. But the facial recognition function is also embedded onto the social security card that the government has launched recently. So I think there will be more use case or more even applications coming to the market in this year as well as next year. So possibly Japan could be the one of those leading country to adopt facial recognition or biometrics more widely than the other countries in the Asia. That's my thinking right now.
Very interesting. Yeah, I think the comfort level with that and the various activities, I think to authorize a payment, people might be very happy to use their face or use their finger. But kind of similarly to buying insurance online, people typically don't buy high value insurance plans because they still want to have that human interaction. And kind of similarly, I guess in biometrics, that you might not be as excited to open up a bank account using your
That's
face
right.
as you would be for authenticating a payment,
Mm.
which is a big change. Thanks for that, Maeda-san and Kieran, for that discussion on biometrics. One of the other trends that we have for this year is around cash. And I think when we look at the development of cash and the shift away from cash to digital payments, many people within the industry, both from development organizations and other regulators, see cash as a way of moving things, see digital payments rather as a way of moving things forward in terms of, the efficiency, the safety, cost element of using digital payments often outweighs a lot of the traditional uses or benefits of using cash. But in certain parts of Asia, we're still seeing cash be king, and that's really one of the trends that we have in 2024 is that in parts of Asia, cash is still king. And we had a very direct experience with this when we were doing some work in the Solomon Islands towards the middle of last year. And we had gone over there for about a week and a half for a field study looking at the retail payment platform there in Solomon Islands and doing an assessment on that platform and kind of mapping out where it could go in the future. As we were in discussions in a cafe, the power shut off, and all of a sudden, digital payments were no longer possible, and cash truly became king in that environment. And so, really, what we're saying in this trend is throughout 2024, although digital payments will continue to grow and we'll see more digital wallets and more adoption of digital payments, we'll still be reminded about why cash is king in particular places like humanitarian crises, refugee situations, and other use cases in developing markets, but also in developed markets. Here in Singapore, where the older generation is more comfortable with using physical cash or holding physical cash than they are with digital payments. And so we expect to see a little bit more of a rationalization from the industry about where digital payments fit and where cash fits. So, Joe, maybe let me bring you into the conversation to discuss this a little bit more. And in the work that you've done and the research you've done and the reports over the past year, how has cash come up as being a critical part for many jurisdictions that we're working in?
Thanks very much, Denon. Yeah, well, I mean, look, you're absolutely right. Digital is not always better, and I think sometimes we forget that in our sector. Many rural economies across Asia operate on a largely informal and cash basis, and there are a number of drivers behind that. These are lack of infrastructure to support technology infrastructure, but even basic infrastructure like electricity, which can be limited. And often case rural populations may have a general distrust or a lack of familiarity with digital payment systems. And also the informal nature of many businesses in rural areas lend itself to cash transactions. So I think really the primary challenge of going cashless is this digital divide that we have. That is the gap in access to digital technologies and internet connectivity between urban and rural areas. Cash remains a symbol of accessibility and simplicity. It doesn't require technology prowess or connectivity, and it's universally accepted. And so, for many in rural communities here, cash transactions represent a sense of security and immediacy that digital transactions cannot yet match. And so, there are a number of implications for financial service providers and policymakers. And really, those are this need for a more balanced approach to financial inclusion that accommodates different populations' diverse needs and preferences. So, financial institutions, for example, might want to rethink their strategies to include more hybrid models, catering to digital and cash transactions. And then for policymakers, it really underscores the importance of addressing this digital divide and enhancing financial literacy to make digital financial inclusion a reality.
Yeah, those are really good points. I think in particular around the strategies for banks, because the traditional strategy for a bank has been digital first, and we've seen here in Singapore the challenge that a couple of the larger Singaporean banks have faced with that over the past of the year with outages and other challenges from the pure digital form, and so when the downside of going completely digital is that when somebody needs help, it's not there, and that especially on times like the weekends or holidays can be quite challenging, which we also saw. So it's interesting to think about what the implications are for traditional banks and where they should put their strategies going forward. So thanks for that, Joe. Very insightful look at what's happening there. And that was one of my favorite trends actually, because it kind of goes against what people typically think when they think about cash and digital payments. Joe, I'll keep you on for the next one. For the next two, actually, we go into country level deep dives. And so the first one was China. And Joe, you and I both have lived in China for a number of years. I came to Singapore in 2018 after having been in China for over a decade, and then you kind of similarly. The narrative shifted very dramatically a couple of years ago when Jack Ma made his speech at the Shanghai Bund Forum that really changed the narrative around fintech in China. Since 2004, when I first got there, around the launch of Alipay and WeChat Pay, saw a dramatic adoption of digital payments and digital finance in general in the country. And then because of this because of this pushback that came as a result of largely what Jack Ma had said, fintech was all of a sudden persona non grata in the country, and it has really pushed away. And one of the challenges with that is that fintech was just such a large part of China's story and China's, push towards technology. And now we've seen it go away from that and effectively away from soft technologies to hard technologies, where China is more looking at chips and other hardware applications of technology rather than some of these software applications. So that's kind of left the fintech industry in limbo. Now, that's not to say that Alipay and WeChat Pay are suffering. Don't cry tears. They still control 80 to 90% of the retail digital payments market in China, but it certainly has clipped their wings slightly and tempered their aspirations about where they can go on this. Joe, I mean, what is your take on this? Do you see this as being a temporary push from the government, or is it really anti-tech, anti-fintech, and there's no chance of recovery for these tech giants?
Thanks, Helen. That's really a great question. And if I just could just set some context quickly, I mean, the reason fintech emerged in China in the first place was because the traditional financial institutions were really pretty staid and lacked really innovative financial solutions. And so there's this massive gap for financial services among SMEs and individuals, with the traditional banks really focusing largely on the state-owned enterprises. And so, of course, with this gap, we had the likes of Alibaba and Tencent that emerged. But then that all changed, and that inflection point, I think, as you quite rightly pointed out, was in late 2020 with Jack Ma's speech. And there was a broader crackdown to rein in big tech's disorderly expansion of capital, as the Chinese authorities put it. I think they really felt that fintech and big tech was getting a little bit too big for their boots. And so that crackdown involved antitrust investigations, hefty fines, and stringent regulations to curb monopolistic practices. So it really did hit fintech sector's operations. But I think, the Chinese authorities are very pragmatic, and I've always said that. And so I think as we move into this year and beyond, because China's facing a whole host of challenges, broader economic challenges, including a slowdown in growth, rising debt levels, I think the government will probably want to start to take a more nuanced approach towards the fintech sector. So, on the one hand, they're going to want to enable innovation, but then on the other, I think they're going to try and ensure that that regulated environment is that safeguards the financial system, consumer rights, is still there. So they're going to try and walk, I believe, a fine line between balancing regulatory oversight with support for innovation. But I think it will be slow, and I think it will be small steps. But I think that's the direction that they will start to move in.
Yeah, those are good points, Joe. Thanks for that. I think it is a delicate balance, but as you mentioned, I mean, I think the Shanghai market yesterday hit 3-year lows. The stock market is in the pits. The economic situation is not particularly amazing at the moment. So what they decide as they go forward on this will be really critical, because although it's never really been studied, it could be argued that these digital platforms have added, at least basis points of GDP to China's GDP over the past decade, and it would be a shame to give that up, especially when we're dealing with changes and challenges in the market in general. Thanks for that, Joe. Um, Moving over, I want to the other country deep dive that we have is on Japan. And really, Japan is a story about demographic shifts, I think, over the course of the next few years. And we have some stats that we'll put up on the screen around this. But over the course of the next few years, the aging nature of the Japanese population will really have an impact on the economy and the way the country goes forward in the future, as it will for China and many other countries around the world, to the point that I believe that looking at China 40 or 50 years out from now, the Chinese population will be nearly half of what it is today, moving from 1.3, 1.4 billion people down to about 600, 700 million people, which is a dramatic change. And with that, there's going to be a smaller, younger generation that's supporting the older generation. I think one of the precepts that we've had in kind of Western economic theory is that you will always have a younger generation to support the older generation. But as adults are having fewer kids and people are able to live longer, it's signaling a dramatic shift in the aging population. And so one of our thinkings for 2024 is that this will really be a big part of the narrative for fintech in Japan in 2024, insofar that the fintech companies that will be successful or that will grow will be the ones that would be focused on some of these demographic challenges. Maybe not necessarily grow in 2024, but the ones that are able to prep themselves and come to market with products and solutions that meet the needs of the older generation are really going to be successful as we look forward into the future. So Maeda-san, let me come over to you on this. I mean, you're obviously Japanese, live in Japan, and probably the best qualified of all of us to comment on this. What are your thoughts? I mean, first of all, on the changing demographics in Japan, and then what you're starting to see in the financial industry and specifically around fintech in addressing these challenges.
Yes, thank you. Yes, aging population has been the hot topics for us, as far as I remember, last 5 years or so, because it has become so apparent. So now they are openly talking about maybe we should change the retirement age from 60 to maybe 65 or 70, because the current recent those senior people, I would say maybe the people, anybody who is more than 60 years old, are more healthier and they're more younger physically when if you look at 50 years ago compared with 50 years ago. So that means we might have to work till we drop dead. But at the same time, it is also true that providing the senior-friendly fintech solution remains as an issue, as you mentioned, and it's not easy to overcome as well. And there are many apps. The fintech company has been creating lots of apps, but based on those apps based the which new fintech solutions, and unfortunately it doesn't have much for certain type of senior people because it takes certain digital literacy, unfortunately. At the same time, from the perspective of potential volumes coming out from those seniors, they are saying that they cannot be as big as demographic sectors, as those sectors are not as economically active as others. Rather, the other important issue with those senior segment is that the over 60s holds more than 60% of total personal financial asset in Japan right now. And it's slowly decreasing, but still they are the majority. And out of those personal financial asset, 30% of their asset is still held at the saving account as a cash, not investment, and not buying any corporate stock or anything, just in the form of cash. So if you don't do anything, those cash will be collected by the government as in the form of inheritance tax, which is not good. So government has created a scheme where setting tax exemptions amount for them to giving away their money for their grandson, granddaughters, or even their son, because those are the segment who is in need for more the money for educations, for their own investment, all the stuff. So that the government aims to move the seniors' money into the society, make the economy roaring. So far so good, but I haven't heard that that has been working very well than they expected. In the meantime, although the society is aging, but overall adoption of the cashless or fintech solution is on right track, I believe. As briefly mentioned, Japan has developed kind of unique landscape as far as financial service sector goes. In a way, one of the core retail banking services, which is in this case payment card business, is already wide open for the other non-bank the entities for a long time. This is also due to the fact that the once bank was not allowed to conduct the payment card business by its regulations, and which is now lifted by its after many credit card company was born, including banks their own banks subsidiary one. So government has obviously set up license scheme for those non-banks so that they can control and manage like they do to the banks. But that also created enables many merchants to become the credit card issuers by themselves. So we have more players, untraditional players in the fintech world than maybe other countries in the AP as well as in the Europe and the US. That created lots of the application is started to born. But as all those results, uh, Japan's cashless ratio kept raising, and the latest result shows it reached 36% in the 2022, compared with 21% in the 5 years ago. So the government is pushing it, but in the cash, I think that the government is trying to reach to the 40% or maybe 50% in the 2025, which most likely they will reach. So hopefully that would expand the coverage into the older segment, as well as the developing the new solutions in the fintech in Japan to create more business in the fintech world right now.
It's amazing the thought that's gone into that and how the government is behind it. I guess, to a large extent with many of these countries like Japan and China, the government has no choice of paying attention to it because it is a dramatic challenge, and how that fits into policy, not just in terms of regulations around some of these financial products and services, but then, tax policy, inheritance policy, as you mentioned,
Yeah,
is
I
pretty
mean, so
critical.
the next big thing in Japan is about the investment. So they have created the scheme, copied from the UK's, scheme called NISA. That's the with certain amount you can be tax free for the capital gain. So they made it for originally when they announced it was for the limited time only, but they made it for good with the amount they increased, so that the government wishing that Japanese people start investing, not saving the cash at the bank account.
Yeah, moving away from being savers to actually spenders and consumers,
That's
and
right.
that
That's
a
right.
common challenge. I think when I look in the U.S., the biggest criticism right now is the ability to buy a house, whereas kind of the baby boomers or the people that are in their 40s, 50s, 60s now have had really good run up in property prices, such that the younger generation isn't able to purchase a house anymore, and it's really caused a lot of consternation there as well. Maeda-san, thank you for that. It was great. For the next trend, we want to look back down to Southeast Asia now again, and really looking at the funding bubble. I think when you look at funding amounts over the past couple of years, certainly in 2020 and 2021, new funding records were set in many jurisdictions around the world, and more particularly in Southeast Asia, where fintech became a key destination for funding rounds and money that was going into startups. That's changed dramatically over 2022, 2023. 2023 funding amounts were way down, almost pre-pandemic levels in certain countries. So that's really changed the nature of things, and that, coupled with a high interest rate environment, has made it really difficult for fintechs across the region. And indeed, over the course of last year, we saw a number of notable fintechs shut down. Others have stopped hiring. Others have pivoted. Others effectively had fire sales to sell to other companies. So there's been traumatic change in what's happening in funding in Southeast Asia. Kieran, I want to come to you. With your experience in the tech space and from what you've seen, what's your feeling for funding for Southeast Asia startups in general, and then more specifically in the fintech space?
Yeah, that's a great question, Zanon. And as you rightly pointed out, the funding landscape has gone through a real roller coaster over the last couple of years. I would say we're in a period now heading into 2024 of reconsolidation and growth of funds again, after they were somewhat decimated over the last couple of years. And that has had a massive ripple effect across the ecosystem, as you pointed out. Many startups have had to wind down and either exit or sell their businesses at a significant loss, which has really stifled innovation. We have a very vibrant and healthy ecosystem in the fintech space, and historically that has been well funded, and many of those investors have reaped the benefits. But throughout the COVID period and with what was going on with the interest rates, it became very apparent that was going to stop happening. So the era of free money somewhat dried up very quickly. But a lot of very savvy founders were able to pivot, were able to stretch their dollar, and certainly find new revenue streams. And one of the fascinating things that we've seen is that focus has not only happened in the startup ecosystem, but also at the enterprise level, with a lot of large companies, instigating layoffs and streamlining their businesses and really optimizing for revenue, to ensure that their businesses can sustain the headwinds that we've been seeing. With that, I would say that over the next couple of years, what we're hoping to see, and what we predict will be sort of a re-emergence of these funds. I've already seen a number of funds announce new ones that they're looking to build, and are raising money for. And that will start breathing life back into the fintech ecosystem across the region.
Yeah, it's interesting to see, especially here in Singapore, how things have changed because Singapore has kind of pivoted to be heavily reliant on tech in terms of large tech organizations like Meta and Google and all of these players have their headquarters here in Singapore and have hired a lot of people in that space. But when there's kind of a cold chill that comes across that side of things, in one way it makes it easier because you're able to bring on talent that you might not have gotten in other times, but at the same time, it makes it more challenging for the ecosystem as a whole. So yeah, hopefully, we'll see some bright shoots over the course of 2024. If there are rate cuts that come into play, some of this could play out such that that funding will come back on the board and fintechs will be able to grow as they were before. Thank you for that, Karen. Very good. Now, coming towards the end of our webinar, the last trend that I wanted to cover was on transition finance. And if you're not familiar with transition finance, this is the idea of kind of the next stage of ESG, whereas traditionally there's been a lot of focus on green finance, so looking at businesses that have green characteristics today. But one of the challenges of green finance is that it doesn't really incentivize a shift for traditional kind of brown players in the industry, so traditional polluting companies and organizations. And there was some interesting studies that we reference in the trends report that we'll put out that actually say that green finance is not very good at incentivizing good behaviors because it means that a lot of the brown organizations, because their cost of capital is higher, tend to rely more on short-term solutions that may not actually be green at all. Coupled that with the fact that we've seen a bit of a pullback from some of the large organizations in their commitment around green activities. So ExxonMobil, BP, a lot of the major oil and chemical producers around the world have kind of shifted away from um, that kind of direction or narrative around ESG. And so it kind of leaves us in this situation where a lot of the focus on ESG is up in the air. And so that brings in the idea of transition finance. And really what we're looking at here is financing the transition away from non-green activities to green activities and really focusing on that particular segment of the market, which will make it easier for brown companies to shift to be greener companies. Joe, I want to bring you into the conversation on this. You read through some of the research reports and worked on this trend for the report itself. What were some of your observations or the things that surprised you about this when you were looking at it?
Yeah, thanks, Enan. We hear a lot of talk about green financing, and financing to help firms. But this idea about transition finance, where you're actually helping um, high carbon emitting industries in their path towards decarbonization, is a really important one. And especially for this region, because we have a lot of industries, a lot of sectors here with significant carbon footprints. Coal-fired power generation, steel, cement. And so transition finance is immensely relevant to this region. But there is risk involved with transition finance. There are challenges. Those are legal, regulatory, and reputational risks, but primarily also the risk of greenwashing. And I think this is where fintech can play a key role here. With its digital innovative solutions, it can help to overcome some of these challenges. So, leveraging data analytics or blockchain technology, artificial intelligence, it can help to enhance the transparency and accountability of financial transactions in transition finance. And this is going to be incredibly important if the region is going to be able to meet its commitments to the Paris Agreement. There's a lot of pressure on stakeholders, and there's this realization that there's going to be a need for trillions of dollars investment before 2030 if we are to limit global warming to 1.5 degrees. And so I think that fintech can really help unlock the potential of transition finance. Transition finance to help steer the region towards its net zero goals.
That's great, Joe. That's a positive way to kind of close out the webinar on this is what we can do as an industry around this, because I think with Greenprint here in Singapore and a lot of the other initiatives, we've yet to kind of see the rubber hit the road in terms of making a lot of this reality. But as we move forward on this, it'll be really interesting to see how it develops. Thank you for that, Joe. And thank you everyone for being on the webinar today, both the panelists and attendees. We realize that you have a lot of things going on. So the fact that you took some time out to listen to what we see for the future in 2024 means a lot to us. As I mentioned before, this will be part of has a report that we'll be launching in the next week, going through all of these trends that we talked about today, and a couple that we actually didn't get a chance to talk about in much more detail. And so with the QR code that's on the screen, you'll be able to access that report and download that report from our website. As well, we'll be posting a recording of this in the next week as well. We'll trim it up a little bit such that you can download it and look at your leisure, or if you had registered and had a chance to see it. If you haven't had a chance, please scan the QR code on the screen to sign up to our newsletter. We have a weekly free newsletter that we send out that covers what we see on a weekly basis as being some of the key trends within the industry. And we always receive positive feedback on this, and the fact that it's able to help people kind of navigate what's happening and get a deeper look at some of the trends, issues, and announcements that are changing our industry going forward. And as always, if there's anything that we can be of help of across banking, payments, capital markets, please do reach out. We have covered projects across the Asia Pacific region, and now with our partnership with Atlas Technologies, Japan is a key part of our remit and work that we're doing both for Japanese clients in Asia, as well as bringing Kapronasia's clients to clients and services to Japan. So really looking forward to 2024, as well as seeing you at the myriad of events that are coming up, including the Japan Fintech Festival, Money 2020 Asia in Bangkok, and of course, SIBOS and the Singapore Fintech Festival later this year. So thank you once again to all of the panelists and all of the attendees and watchers of this webinar. Again, it's one of our favorite to go through, and it's quite fun for us to do. So thank you for joining us today.
Thank you.
Thank you.
Thanks.